The focus is going to change a bit here, and we're going to go to adaptive energy infrastructure, strengthening our response to climate and energy challenges. For this discussion, I'd like to invite our moderator, Felix Ferstl, the principal of Ananda Ventures, GmbH. Thank you, sir.
Good morning, everyone.
And also, to join this panel, we have Simen Valåmo, the Director of Market Intelligence, the Kyoto Group, and Christophe Defert, Head of Climate Technology Investments at HSBC Asset Management. You give us 1 second while we mic them up, make sure you can hear them perfectly to discuss this interesting topic. 1 moment, please. Are you interested so far? First panel, was it good? Yeah? Yeah, come on, a round of applause. They did a good job. Please, sir. You've got lots of panels today, so I hope you're willing to listen, take notes, make contacts afterwards. This is a great place for networking. At lunchtime, after lunchtime. We've got a long day ahead, but I'm sure you'll have fun. This is your speciality. You're the experts, along with these gentlemen. Yeah. So, as I said, panel number 2. Adaptive energy infrastructures strengthen our response to climate and energy challenges. Gentlemen, after you. Thank you very much.
Welcome, everyone. Good morning, and thank you very much for being here. Thanks for having us as well. So, I'm sitting here with 2 guests. Unfortunately, our third one could not fly in from Sweden in time. There was a delay. So, next to me for this panel on strengthening our energy infrastructure in light of our challenges in energy and climate is Simen Valåmo. He is Director of Market Intelligence at Kyoto Group, has a background in utility and aluminum, and after that went on to trading in commodities before then joining Kyoto Group. Welcome to on stage, Simen. What are you doing at Kyoto?
So at Kyoto Group, I am responsible for the business development and partly the investor relations side. So it's both in terms of the market for our product, but also in terms of the financing. Yeah.
Thanks a lot. And before we come to the solution that Kyoto provides, I would like to introduce our second panelist here on stage, Christophe Defert, who is the head of climate technology at HSBC Asset Management. He brings a background in finance and PE and subsequently worked at Centrica for over 10 years, for over a decade in that way, in M&A and corporate development before building the venture capital arm of Centrica, and that led him to then move fully into climate tech investing with HSBC. Welcome, Christophe.
Thank you.
So we already heard that before. There's quite a lot of overlap, grid and the infrastructure, and we heard that before, the challenges that we face there. And also the opportunities in terms of we need to decentralize, we need to flexibilize, so and also the timing question, so bringing up all of that in the next 20 years. So we could build this panel around a lot of topics or open it up very widely, but maybe let's focus on the solutions that we have here or that you bring to the table. So which of these challenges that we currently face in infrastructure are you addressing or have an eye on, and how do you address that with the Kyoto Group?
Yeah. So first of all, Kyoto Group is a Norwegian-based company that provides a solution to decarbonize industrial heat. And the way we do it is that we have developed a thermal energy storage system to connect intermittent renewable energy power with a steady steam or heat demand in the industry. So we use renewables whenever they are available. We charge up our thermal battery, that is called a heat cube, and then we discharge in form of steam or whatever type of heat that the industry needs whenever they need it. So what we do is that what we address the need for flexibility, new flexibility in the system. Of course, as a consequence of, if you look at the last 2 decades, but also going forward, you are replacing a lot of flexible power production with intermittent renewables. So it creates a need for new flexibility to the system. At the same time, you have a global heat demand. You know, heat actually accounts for 50% of the primary global energy consumption today. So and if you are to decarbonize this, 90% of this is produced with fossil fuels. So if you are to electrify it, you also need to do it in a flexible manner to solve the challenges on the energy side. Yeah.
And in terms of, then a follow-up question there, in terms of the heat demand in industry, what would be the typical customers be that use or can use the heat cube, that heat battery that you provide?
So, of course, you use heat for all kind of processes in different forms. You have hot air, you have hot liquids, you have also steam. Today we focus on steam demand. So typical industries would be food industry, pulp and paper, chemical industry, also steel industry. So those are the main industries that we target right now. Yeah.
And Christophe, turning to you. So here is hardware, or Simen coming from the hardware side. So in infrastructure, yes, that is, as the name suggests, that is hardware intensive and it needs hardware. As an investor, you and I both, we also like to look on the software side. What role do you see in that whole transition, in that infrastructure transition that we are in? What role do you see for software, and what areas excite you?
Sure. So let me give you a bit of context first, because obviously everybody knows HSBC, I'm sure. What people may not know is HSBC Asset Management, which is associated to the bank, manages about $700 billion in assets, so it's big. Within that, we joined the group 3 years ago to essentially start a venture and growth equity strategy in the climate space. And thank you for the background. Obviously, our team has a background in the energy space, but for us, climate is a little bit broader than just energy. I do feel the energy industry has been the pioneer in this. I mean, I think the reason I came into this industry 20 years ago is because I saw the largest producer of coal in the UK transitioning to biomass, right? This was in 2005, and that trend has continued. What's really different, and what makes me very excited about this space, is that we are playing at the intersection of infrastructure and a more traditional kind of software space. Because at the end of the day, it is a capital-intensive industry, whether it's energy or the broader climate, and I can talk about that a bit more. And ultimately, what is different today from maybe 10, 20 years ago is that all this infrastructure is connected, right? And so while the infrastructure does all the heavy lifting, and for me, you talked about the need for renewables and what you do. If solar and wind wasn't where it is today, I don't think a lot of these technologies could happen. And it's the same for software. We think there's a real opportunity today to invest in both, hardware businesses, but also software to optimize that infrastructure.
And at HSBC Asset Management, where do you, what are areas that you currently look at to invest in? So which startups here should approach you?
Yeah, so we do energy, the broader energy transition. So for me, that's energy and kind of transport, mobility. Sustainable supply chain, which is for us an important one, and what we call climate risk management. So that's much more of an adaptation theme. So that's really broadly what we look at. And I forgot to mention, we are an investor across North America and the greater Europe. That includes Israel.
And you just brought up a term that is really that have not come to the discussion before. So it's not only the challenge in terms of adapting our energy infrastructure, but then also adapting to climate change that you just referred to. So climate change management or adaptation there. So we at Ananda, we also have that as a theme and invested in an area there also around protecting power lines from wildfire. And manage that better and predict wildfires better with one of our companies, Aurora Tech. So what do you see there? So next to the software side that can inform the grid or help the energy infrastructure, what are the use cases around the adaptation to climate change?
It depends. It depends on the industry that we're talking about. So I don't want to... You have an example in the energy industry, and obviously energy is the topic here. I would argue in the insurance industry, right? If you're a crop insurer or if you're a flood insurer, your business models fundamentally change because climate has changed and it's really hard for you to kind of predict when climate's going to impact your underlying business. So you're going to turn to technology, whether it is geospatial imagery or other things that you may use to fundamentally change the way you assess your risk. So for us, that's important because it's part of that adaptation theme. There's, in terms of adapting, there are brand new industries that are emerging, like voluntary carbon markets, right? One thing that I find fascinating about voluntary carbon markets is that, and I don't want to strand too much away from it, but today it's really bilateral in terms of how it works. But for all of us who've come from the energy industry, right, we know that a bilateral relationship tends to move into a PPA and then a marketplace, right? And so you can see how voluntary carbon markets can very much follow the path of the energy markets. And for us, coming in early in this space is really interesting.
Cool. Then coming to the, or I'd like to go then to drivers or what's changing at the moment. As we heard, hey, we need to build up momentum over the next decade. So Simen, Kyoto Group is around since 2016. So from that, through that phase, or that you already in your development phase, how have the conditions changed for you and in the market, and what do you see as the current drivers that foster your growth?
So yes, so Kyoto was established back in 2016. The idea then was to somehow connect solar with heat. The founder spent some time to get to the idea of a thermal battery for the industry. So I would say that we started around 2018, 2019 with the solution that we have been developing. And from that time until today, I mean, heat, first of all, heat for many people is not an unknown market, but it's not really a good, well understood market. And it's always, I mean, if you go back and I myself am an educated engineer, and then it's all about heat that you do through combustion, right? You don't use electrification for this. So it's been a process to mature the market, and at the same time, I think what happened in 2021, 2022 with the gas supply from Russia being cut out, it sort of showlighted how the need for energy security. And naturally, what we saw then is that there was a substantial increase in the interest from the market to look for new solutions. That said, still today there are, the power market and the regulation of it are still lagging somewhat behind in terms of incentivizing flexibility, whether that is thermal storage or whatever type of flexible demand. So there's still a way to go, but we see in a lot of markets in Europe, that is our main focus area now, conditions that are, or changes in the regulations and in the market design that makes it an interesting investment case for the industry. Yeah.
Cool. And then turning to you, Christophe, also on the timing and what you mentioned before. So infrastructure came in quite a bit in the first wave of clean tech investment in the early 2000s. That was a lot about also infrastructure, hardware plays, etc. What can we learn? So now climate tech has made a huge comeback, but we looking at the past, it's very good to learn from that. So what's your side on climate tech 1 or clean tech 1.0 to now, and what can we learn from that? What has worked, what hasn't? What's your view on that?
It's a great question. How much time do you have? Look, I think we might want to thank all the people who were part of Clean Tech 1.0, because I don't think we would have the renewable infrastructure we have today if it wasn't for that. And it was a tumultuous kind of journey for a lot of people. Some people made money, some people didn't. My personal view on what happened in Clean Tech 1.0, having observed it from the sideline a little bit as a corporate, I was an investor then, is that you had somewhat of a mismatch between the capital that was going in and the underlying asset. So a lot of venture capital firms who were, trying to support, new solar technologies kind of got stuck because the way solar worked was much more infrastructure-like, right? And I don't want to get into the detail, but once you have a cost of your solar and you put it in the ground and you got a PPA on it, that's stuck, right? That price. But you're doing that in a context where the cost curve is continuing to go down. So every new project that came after you tend to be cheaper and therefore more efficient. So I'm simplifying a little bit. I think where we are today, though, is that infrastructure, that base, what we like to call the building blocks of decarbonization, so solar, wind, to a certain extent, lithium iron, are kind of established as the infrastructure technologies, at least for the next 10 years. That's my perspective. It doesn't mean that first-of-a-kind technologies are not going to grow, but I think within 10 years, we have to work with what we have, and that's where software has a big part to play. I think you can optimize that a lot. And by the way, that applies to energy, but in supply chains, keep in mind, supply chains are made of infrastructure, right? They tend to have production facilities and tools and things like that. That can also be optimized by software. So we think there's a big role to play there. It doesn't mean you shouldn't support the first of a kind. I think the first of a kind, what you have to figure out is your timing. Mostly because we are constrained as investors, as you know, which is we tend to operate off 10-year closed-ended funds, so we have to bring back liquidity to our investors within that 10-year period. And for some of the first-of-a-kind businesses, the ones who do need a lot of capital, that timing constraint is hard. You're seeing a lot of investors in the market coming in and trying to solve that problem, and I think that's still a kind of work in progress.
I see it in kind of a stacked way, or I would like to give the question to you, Simen. So stacked way in terms of there is this building block, the infrastructure, solar, wind, etc., that came on in the 2000s. Now it's about software to optimize that, and then as a next stage, new technology that is now first of a kind can come on top of that, use the optimization, use the flexibility software that is in there. Do you think about that at Kyoto Group, and look at what's happening in the market in terms of software and flexibilization and build on top of that?
Absolutely. I mean, you need that type of software to connect and to really, which is the whole whether it's thermal energy storage or any type of storage that basically represents a flexible demand to the power market. It needs to be able to actually capture whether that's the value in the market due to the volatility, or to follow a production profile from a solar PV plant or a wind farm. So in that, it's natural that, or it's a prerequisite that you have software that is able to do this. And what we do in Kyoto is that, first of all, on our side, we have developed an AI-based platform to operate the heat cube, but also to prepare the energy management system that can connect to, for example, an energy trader like Inspired, for example, has been mentioned earlier here, that optimize flexibility across the market. So both in terms of how we operate and prepare our heat cube, and also in terms of how we make it compatible with a trading tool or optimization tool. And I just want to comment on that. I in general on the development now, I see. I understand your point, Christophe, and I also think there's going to happen a lot on software now. At the same time, what we see, if you look towards 2030, which is approaching quite fast, there are some CO2 reduction targets in place. And we see that the industry are now looking to, okay, we need to do something. So at the same time as you optimize the current energy infrastructure, I think also in the near term, you will see a lot of new infrastructure like the heat cube being rolled out because there's a need in the industry to actually reduce their CO2 emissions.
I agree. I would say the biggest challenge we have is not the startups, not the investors, it's really the consumers, particularly in Europe. So when I say the consumers, I mean, I do think, and you're giving me 11 minutes to if I have a plea for anyone in this industry, is to get not the end consumer as in the people, but the utilities or the corporates who ultimately will use, your consumers or your customers to adopt these things faster. I mean, if I ask startups in this room, how many have managed to sell their product talking to only one person? Nobody raised their hand, right? The reality is once you get into a corporate, I suspect your sales cycle is probably at least 12 months. Am I wrong?
It takes time in an industry,
Right.
for sure.
And that's part of the problem, right? We're growth investors, right? We promise to the people who are giving us their money, and some of them are, by the way, pension funds. So it's your money, right? So it's a virtuous circle that they want to make sure they get their money back with the returns within 10 years. Yeah. But ultimately, for that to happen, your technology has to get adopted fast. And in my mind, the only barrier to that is what happens inside the corporate in terms of their risk appetite and their ability to innovate inside. And I say this because I've been inside a corporate, and I talk to a lot of corporates.
And taking all of these things together, so the risk appetite of the customer, but also the financing need. So your solution, the heat cube, is built up in a scalable, modular way. So how much was that a conscious decision because of exactly these forces, or how did you come up with that design choice of making it modular and scalable in that way?
Well, I think there's two aspects to it. One, and the most obvious one, is that if you look at the industry and the need in this industry, it varies significantly in terms of what is the actual demand at a certain factory. Even within one company, you can have different demands at the different sites. Also, you have since we are connecting power to the industry, it's also about the regional or local conditions on the grid, for example. Is there available area to develop solar PV off-grid? How is the local grid? What capacity can you get there? So that's the first thing. Another thing is that in terms of, as we develop a new product, we need to, of course, lower the capex over time. And the way we do that is that we produce or design a modular setup that allows us to target a market segment now, and then continuously develop the product to reach a broader market, while taking the learnings we have on the way. And in that way, we can utilize the effect of economy of scale, but also design optimization on the way towards a broader market.
And would you agree with Christophe's point on the challenge is not so much on the startup side nor on the investor side, but on the end customer at their risk appetite, the timing?
For sure. I think to really, for the market to take off, yes, you need to see the challenge lies in this industry for sure. At the same time, we see now that this is slowly changing. You see, of course, more of the big corporates trying to act on their strategies in terms of decarbonization, but it's a maturing process. I mean, energy markets, if you haven't been in the energy markets and then all of a sudden you need to relate to it to have a solution, then it's also a process to understand what you're doing. So I think it's for sure a challenge, but we really see that the industry starts to pick it up. Yeah.
And Christophe, what do you think or is there something that we in finance and investment can do? I don't know, could be a different structure, or what do you see as levers to make that even easier for for us to invest in first of a kind company, in new energy infrastructure?
That's a good question. When you say we, it depends. Obviously, I joined an enormous financial group because my hope is that it gives, it amplifies a message. And trust me, I do a lot of talking inside the group to try to, and the group as a whole is very keen on this, right? Try to incentivize their clients to obviously adopt a much more sustainable perspective, and that includes starting to think about the infrastructure. I think the industry as a whole, the investor industry, is moving in the right direction, right? There are some more creative funds that are coming up. So, folks like Just Climate, who I like because their fund is not just an equities fund, it's a mix, and they're trying to help first-of-a-kind technologies to grow. And so as new funds are trying to solve that problem with different types of capital, I think we're playing our part. I think banks like ours need to be much more coordinated across all the different types of funding availability, right? Whether it's equity or debt, and be able to create more tailored product for first of a kind. Look, the industry is moving in the right direction. Whether, a lot of what we do is a question of timing. Like how does the timing of the capital is going to, gel with the timing of the technology? That's really the question.
I would like to, for the last 5 minutes, switch to another topic of economic feasibility. So you said you're a growth investor. Maybe then, please, for the audience, also remind which stages that would be for you, and also the need for business model, or where would you invest in terms of how profitable does the startup, the company have to be? How do the economics need to look like?
Sure. So this is something that sometimes investors who invest in our funds struggle with, is when I say I'm a growth investor, I invest in Series A+. So I still believe Series A can be a growth investment. And you alluded to software, and part of the reason why a software company at Series A, they tend to have a proven technology, a product market fit, and commercial deployment. A lot of software companies that are raising a Series A will have $1 million of ARR plus. And so really what we are underwriting as an investor is the growth of that company. We don't only invest in software, just to be clear. It's a big component of what we do. Now, it's true that for other types of technologies, we're going to be looking at maybe later stage, but more importantly, we're looking at the capital efficiency of that technology and the growth potential. And one of the things we look at, we don't look at profitability. That's not what we invest in, right? We don't invest on how much EBITDA you make. But we look at the growth of the revenue, and we look at the unit economics of your product. And right, again, software is easier because you're talking 70, 80%, but we're looking at things, and we've invested in synthetic biology, in alternative to fertilizers. So there are some unit economics in certain technologies that worked really well. We invested in a company in the US that does level 3 fast charging. They combine charging and battery. They can get to 30% margins on their hardware. So that's good for hardware, and that's not a problem, as long as they can go really, really fast in a capital efficient way.
And Simen, how is that at the Kyoto Group? So you were founded 2016, your first installation last year in Denmark, 2023. So you are on the market with the technology, with the first of a kind facility, and you also mentioned, hey, the costs obviously over time come down. So where are you, and how economically feasible is the heat cube already?
Well, as you said, we have our first installation in Denmark. We also have one that is under construction now in Hungary, which is a commercial installation. So the heat cube is economically feasible. You need to optimize the case right now, and you need to target the correct markets. In general, if you look at fuel switching, basically this is fuel switching, right? And then you need to somehow relate to the gas price and the CO2 price, and of course, as everyone knows, it's gone down. But still, we see that we can make cost competitive cases and profitable cases. And the way we are able to do that is that we have the flexibility in our heat cube to utilize the value of flexibility across the power markets. So one thing is that we connect off-site or off-grid PV to produce heat, but we also are connected to the grid. So in that sense, we can do ancillary service for the grid operators. So both, we take advantage of low-cost solar PV, we take advantage of the volatility in the wholesale power markets, and we also take advantage of providing ancillary service to the TSO. So when you combine this in the right markets, then we have profitable cases. Yeah.
Great, and then to wrap this up with one question around the timing and acceleration of the market that we often, we tapped into this, the panel before tapped into this. So if you had, for the outlook into the future, if you had the chance to, or one roadblock on our transition to adapting our energy infrastructure, which one should be tackled, or which framework to change? Maybe starting with you.
Yeah, so I think if you looking at the market that we are targeting, and which is a huge market, the heat market, and there's one thing in general when you do fuel switching, and that's that you need to do electrification to a great extent. And the way let's say the regulations are today, it's based on historical demand profile, historical power system, and in a broad sense, there are still some lagging incentives across the different markets in Europe to incentivize any new flexibility solution like the heat cube. So I think the one change that I see coming and that I think is needed is to adapt the regulation of the power markets so that it incentivizes flexibility in a greater extent. Yeah.
I'll just say customer adoption beyond the pilot, right? It's always easy to have pilots, but actually rolling it out commercially is really important.
Great. And then rapid fire, we are at the beginning of the conference. Who should approach you here?
I'm happy to speak to as many people as possible. I'm really excited to be here. Of course, we are a scale-up company, so I will be more than happy to connect with investors, but also if there are any association or industry, I'm very eager to get in contact with.
And for you?
Yeah, I mean, look, startups, co-investors, investors, we're happy to talk to everyone.
Great. Thank you so much for your insights and wish you a great conference. Thanks for listening in.